Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. And I suppose there's no better place to start than from the trade that we looked at, and Swissy versus yen. So we talked about this last week. We talked about sort of this bar here, and it continued to come back and actually give us another entry on that particular bar. So the previous entry was there and it never got triggered in. So then as we're coming down, we had a lower low and then we had a lower high on this particular red one. So we actually got the entry down about here. So if you amended that trade, you are triggered in now and you're down. So that means you're probably down. If you risked 100 quid, you're probably down about 70 quid at the moment, which is still fine. Why? Because we're sitting along this level. It hasn't really broken. It's still sitting on this level. And let's see how the day plays out. Now, the structure behind this trade is pretty decent. We have Japanese yen weakness and we have Swiss franc strength, and we have this continuing over the last couple of months. Well, we theoretically have that running for the last theoretically that's running since 2016. The question here is, are we going to be triggered out before it goes? Or are we going to be triggered out, come back down to here, and then take off? That's the only question for me. It's not is this going to be a change of direction? The only question here is that have we anticipated the bottom of this floor, or is it going to go a little bit lower? That's the only question sort of for me at this present moment in time. Anyone who is on the chat room and the matrix and all that sort of stuff, we have back here. Where are you going? So here we have worked out that US dollar is the strongest currency out there, and we can see NZD is the strongest or the weakest. So the second strongest is CHF. But at the present moment, we have JPY at -1. So we are trading strength versus weakness, but we're not trading strength versus the weakest currency. We're trading it versus the third weakest. Aussie and NZD seem to be the weakest. Now remember, this data is all a week old, so it's stuff that's last week. So we're assuming the same thing will continue. Now it may not. It may not. Now yen, Japanese yen is having a really, really bad time with debt, and their debt is absolutely spiraling out of control. And that's why we have had such weakness in the yen, and Japanese yen are looking for a bailout or a cutback on debt from the likes of the US and the likes of the G4 summit. Okay, so they're looking for all the superpowers there to cut back on the debt and the repayments of it, and they're looking for a bailout. Whereas the chairman of that, sort of Yellen, has come out and said that, look, we're not even discussing a bailout for China at the minute. It's not even on the agenda, which you would expect that this will continue with a little bit of JPY weakness continued. Now, as we can see today, that hasn't materialized in the market. We have a selling day today. But again, it comes down to whether we will still be in this trade and then turn, or will it trigger us out first and then go? Anyone got any questions on that particular setup? Now, the reasoning behind that setup was, first, we had a horizontal retest here, break and retest. If I go out onto the weekly chart, there's only that one sort of touch there. So it's pretty decent level then. It's broken and it's retested. So that's where that has come from. I do have a level here, which is a break and retest of a most recent level. Okay. And then we have the trend line here. So bounce, bounce, and this is the third touch. Is this still a valid entry? Absolutely, this is still a valid entry. So once the price is below the entry, it's still valid. The only reason, so people ask me all the time, is a trade after the time we're supposed to take it, is it still valid? Now, what would make this not valid is, so if I draw this out for you guys, so what would stop this trade from being valid is, I'm going to change this to green. So we had a green bar here, and then this is our entry bar, okay? So our entries here and our stop losses here. Now, what would stop this being a valid entry and is if the next bar made a lower low. So we can see here that the lows are getting lower. So we have that low and now we have a lower low. That's the only reason for this to be invalid, okay? If this were to happen, if that were to happen, and then the next day, this happens, and then the next day, this happens, there's absolutely nothing, as long as it hasn't taken out this low, as long as it hasn't made a lower low from this point, that trade is still valid. Now, yes, you will have little wicks on those. Absolutely, you'll have little wicks on those. Okay, so that is still valid as long as it is in that train track. Now, another thing that would stop that from being a valid trade is if the next trade did this. Wasn't what I wanted to do, but so if that happened, then it's gone past this entry. We are too late. The only way you can then trade this is going down to the smaller time frame, is by going down to the 4 hour, okay? Because that's where the entries has gone way past it. So on the 4 hour, what you would have seen is and that's what have happened on the 4 hour. On this day, we'd have had a 4 hour momentum. We need a pullback on the 4 hour down to some sort of support and resistance. So there, and that's where we would enter then on the 4 hour. Okay, so this one is not valid on the daily. If it's gone past it, you would then have to wait for it to continue, go past this high, and then pull back and bounce off this retest, this support. And then that would be valid there if this continues. But again, we can't guarantee this is going to continue. As I've said to you numerous occasions, I have about a 52% success rate with my trades, but the idea is letting them run, letting your winners run and cut your losses early. Okay, so that's the idea. So again, anyone who took this trade, took this at the time, you are triggered in. We are down about 70 quid out of the 100 at the present moment. And again, we just let it run and see. Okay, cool. So that's still a valid entry. So any other questions on this before we move on to anything else? So we move on to the Nasdaq. Why I'm talking about the Nasdaq is because that's where we have a valid trade or a trade running, or even a second trade running. So depending on you and how you trade. So the Nasdaq. So we took this trade here on the Nasdaq, and it came down. It went down to about 212 quid. So we're risking 100 quid. So it went down to about 212. It came back up to about 79 quid down, and now we're about 20 to 30 quid up. So I've just said about 20 quid up at the present moment in time. So we've had a second setup here. Now, what is this setup here called? And tell me what that setup there is called. So it is called, correct? It's called a double top. This is called a double top. Now, some of you may have known that already. Some of you may not have. You absolute. Some of you may have known that already, some may not. Now, what a double top is where it hits a ceiling twice. Okay, so it goes and hits a ceiling and then comes and hits that very same point again. So there and there. Now it's quite funny because this is the first trade that my partner has taken interest in, which is the life cycle of a new trader. So she, I showed her the trade. She was like, "Oh, Henry, this is the first time I've actually understood a trade that you're taking." So it's going down, and she's all happy. Then it stays there again, and it's come back down, and she's like, "Oh, that's 212 quid up. That's brilliant, absolutely brilliant." And then it goes up here. Now it's only 200 quid up, and she goes, "Oh, I'm not happy anymore." Then it goes up to here, and she goes, "Oh, Henry, can we just take the money?" And all of a sudden, then we're 70, 80 quid down. And she's going, "Henry, I don't like trading anymore. Nope, it's not for me. No, can you just stop showing it to me?" And then I showed her it's down, it's up 60 quid again. She's like, "Oh, I like it again." And that's the life cycle of sort of a new trader. Okay, so, and this is something that we're trying to get rid of. We're trying to get rid of. Now, as a trader, we have two things that we have when we take this trade. We have a stop loss and we have a take profit. Now we have those put in place. So there's my take profit and there's my stop loss. We have them put in place for a reason. Now I can understand that people manage their trade a little bit differently. Now, some of you guys would have taken drag your stop loss down, potentially to there or to there or to there. Some of you guys will have par closed that position. Some of you will got out. But the traders that have been with me for years, again, will have looked at this and gone, the overall trend is down. This is now a double top, and there was a potential entry there again. Now, it depends on what type of trader you are. Now, again, your stop loss should have been in the very same place as this one, but entry, we could have had a limit order at that particular point. And how have I picked that point? Is the open and the close of the previous bar. Which means if you had a limit order there, you're probably up 1.5 to 1 right now on this particular trade. Some people would have had their limit order a little bit higher. would have had it on that level, but that was the ceiling. Now, again, we have no idea how far this will bounce. We never know how far it'll bounce. That's the one thing with trading. We never, ever know. But were we correct with this one? Absolutely. Did it go down as far as we expected? No. Were we correct with this one as a double top on Sunday's webinar? So anyone who saw Sunday's webinar, absolutely. Absolutely. But again, there's two scenarios. There's two scenarios when I was doing this. One scenario is hitting here and bouncing down. And the second scenario is whoop, and then retest. So they were the two scenarios. But out of the two of them, the one that was most likely was bounce here. Why? Because the overall momentum is down. Now, like I said before, it now comes down to how you manage your trade. You could look at this and go, Henry, I'm not happy. There's a low. There's a higher low. And you may look at this now and go, I'm not happy to be in this trade because it's had higher lows. And I can understand that. I can understand that. Why? Because we do have higher lows. It may be something that you're looking at and go, no, this is not a trade I want to be in because of this structure here. The structure is slightly changing. I was reading a story. I think it was on Seeking Alpha. I can't remember where I saw it, and they were talking about an algorithm to predict the bottoms of the market. Now, using that algorithm and using the previous bottoms of the market since the beginning of the S&P, that there's a 4% chance that the market will go lower. Now, an algorithm is fine. It's absolutely fine, which means then it works on previous data, and we use previous data. But looking at the structure of this market, do we think there is more downside on this, or do we think there's more possible upside? Sounds like me emotionally going through the ringer. When I think that's every trader in the world. So most people have said more downside. I would agree. I don't think that it won't take out this low. The question is, will it take out this high first? I think with everything that's going on in the world, with most Europe, they're expecting Europe to be in a recession in the next 6 months. The US yield curve hasn't done inverted yet, and that's why US dollar has been so strong versus the likes of the rest of Europe. Europe has had an inverted yield, which is a big indicator of a recession. And that's why US dollar has been so strong as of late. But it also means with inflation, with the stock market, with what's going on, unless we have really, really good earnings, I would expect this to drop a little bit. I don't see it not dropping. The question is will it take out these highs? And if we look at the market, other than this one here, those highs have all been respected and none of them broken other than this one. The ones that have been broken are these lows. So in my opinion, I'd expect a little more downside. But looking on the positives, so the positives here is we have this double bottom. It made a lower low. Now it's made a higher low. Okay, so the idea of this here is there is a little bit of what you could argue is, Henry, that's a left shoulder, this is the head, and this is the right shoulder, and this could be the beginning of the next upward movement. So there is an argument for that as well at the moment. But again, the overall momentum is down, so I'd expect a little more downside. And that is across them all. Okay. Did anyone take this short off that trend line? The S&P. Come back, hit that trend line beautifully, and then dropped. Anyone take the S&P short? I know some of you guys popped that into the group chat. And I'm assuming by everyone's silence they didn't. Okay, cool. It's not the end of the world. But again, it was a trade setting up there. And depending on where you entered, I'm going to move this one here. So I would recommend anyone who took that. That would be the sort of entry and stop loss. Depending on how aggressive you are, you may want to have your stop loss above this one. But if you're someone who is going, I just want to take a risk to reward trade, then your entry would have been underneath this green bar. And at this particular moment in time, before the market opens, you are 0.4% up. So if you risked 100 quid, you're 40 quid up on that one. But again, I would be looking to have my take profit on this one before this level. Now, do I expect the market to make a lower low? Yes, but it could very easily be a double bottom. We see the market is respecting double tops. There's 1, 2, 3 there, 1, 2 there. Okay, so why wouldn't it then respect a double bottom? So the idea would be is out before it hits that floor. So slightly above it. And this particular one, we would have a 2.45 to 1. Go over on to the Dow. Dow, very similar. Did anyone take the Dow here short? And anyone that took this one? At this present moment, you'd be about 0.65 up. So if you risked 100 quid, you'd be 66 quid up. Again, I want my take profit just on the body of the open and the close there. Okay, see the body, there's where it closed and there's where the other one opened. So I want it slightly above that. And that would actually be a 3 to 1 on this particular chart. Now, it doesn't really matter which one of those you've taken, but if you've taken one of them, there's no need to be in any of the rest of them. Be in one of them, because they're all pretty identical trades. If one drops, they will all drop. If one goes up, they will all go up. It's just a matter of which one has the most downside, which one has the least upside. And that's what we have to try. And by looking at the market, the one that has dropped the most is the Nasdaq. Tech has been taking a battering, which means then it also hasn't been good for the market. If we look at Europe, we talked about this popping back up to here, and it didn't get anywhere close to that. And I don't actually expect it to get up that far. So we were correct with the bounce here. Look, a double bottom, and we're correct with the bounce. And with these bounces, I never ever look for a 3 to 1. It's always a 1 to 1 when I'm trading the likes of these. Would we have got a 1 to 1 out of that? Not at this present moment. You wouldn't have hit a 1 to 1 on that if you'd have taken it. So we're now back at that point. But again, if we remove that for a second, there is an actual setup there to the downside. A break and retest right there. Double bottom, come back and retest it. Break and retest. Did anyone take that short by any chance? Fibonacci. Did anyone take that short? Now, again, the problem with this here is it's a compared to the market, it's a pretty big bar. So I would have probably liked to see people go down to the smaller time frame to take this, rather than taking this on the daily chart. And it looks like I would have waited for you because we didn't have much of a wick here. It waited for the next bar. So we'll drop down to the 4 hour. Let's have a quick look. Yep, we had a couple of bars there on the 4 hour look. You could have taken it underneath there, or depending on how aggressive you are, you could have taken it there. And that would be 1.9. At this present moment, you'd be 1.44 up. Did anyone take the German DAX on either the daily or the smaller time frame? Pop back up to the daily. So just bring the entry down, because that's theoretically where the entry should have been on the daily chart. That's a big movement. To get a 1-to-1, we need that to go down to we need to go to there for a 1-to-1, which is huge. So it's not something that I would have been massively looking to take on the daily. On the 4 hour, the setup was perfect. It waited for us. Look, if you look at it, it had 3 bars there. 1, 2, 3. So theoretically, this waited 4, 8, 12 hours. It waited 12 hours for us before it took off. So French CAC, and again, the French CAC is one that I've sort of stayed away from. It looks horrible. It's nowhere near as clean as a German DAX. It's not something I've been massively looking to trade, so I've stayed away from massively. The same with the UK 100. It's now moving sideways here, so it's not something I am looking to trade. You would probably expect more downside in this one because this one hasn't really had much downside yet compared to the other markets. There's been no real downside to any of these. On the likes of the UK 100. China. So China's had a really nice run to the upside, which this is the first bit of a run it's had since September 2021. So it's nice to see. It's nice to see this little bit of a recovery. Now the question is this going to be the beginning of it, or are we going to see that run the whole way back down to there? Are we going to see that there come the whole way back to that? So which of the two are we expecting? Are we expecting it to come down to here? Whoop. Are we expecting this to come down to here? Or are we expecting it to come down to here? A or B? This is A and this one is B. Which of the two would you expect this to come down to? A or B? So most people are expecting A. It may not. It may actually come down as far as B. Have I confidence in this market yet? Not yet. I would like to see phase 1 and phase 2 to the upside before I would start having confidence in that, if I'm being honest. So I would expect it to probably drop a little bit lower than A and maybe not as far as B, somewhere into this sort of no man's land in the middle here. But I'm not overly confident of it bouncing here. I'd be much more confident of the Nasdaq bouncing at one of those levels than the likes of this. But again, it is definitely something we should be looking at to keep an eye on. So oil, the gift that has kept on giving for us over this whole period of time. Now, I know you guys were looking for this to come back to this level. And again, it bounced lovely. And if you have a look at this, we had a 4-hour trade setting up there, which it did. We had that low test bar there, and I went up to probably about 1.2 to 1. Okay. So that is, 1.23. But since then, we've had a little bit of a drop on this market. We've had a little bit of a drop on this. Now, some of you guys may have, so just to use the Nasdaq as an example here, okay? So we've had the Nasdaq here. It has hit its ceiling once, come down. It's hit the ceiling twice and come back down, okay? So that's what we're seeing here at this present moment. We've now come back down to oil. So just say you're looking for your 3 to 1. We're expecting that to go up to there. Are we confident that if this market comes down and hits this floor, now bear in mind we have 1 touch, 2 touches, 3, and 4. Are we confident that if it hits that floor, it's going to then bounce back up? Yes or no? Answers on a postcard. What's the thinking here? Are we confident that that's going to happen? So we've had a yes, we've had a should do, we've had a no. Not confident. So the people who've said yes, can you tell me why you think yes? The people who have said no, tell me why you've said no. And the people who said not confident, can you tell me why you're not confident? Because there's an argument at this particular point for both sides. So Jeff says it's bounced off the support level. Absolutely. I can see that. Brilliant. It makes sense. Absolutely. Anyone else? It could break through the support level depending on the news release. But why do you think it'll break through the support level, James? What's the reasoning behind that? Because news release, we can't be looking at news. Wayne has said he was not confident, and then he's come on with, but because it's a little bit sideways. Absolutely, I can see that 100%. So in this particular scenario, all 3 are correct. All 3 are correct. We have had a huge level of support and resistance here with 1, 2, 3, 4 bounces. So you would suspect if it comes back to here for it to bounce again. But on the other side of this is what we've also got. We've got a high. Actually, I'll actually draw it in. We actually have a high. We have a low. We have a lower high. we have a lower low and we have a lower high. What does that tell us? So we have one cycle, whoop, two cycles, are we? We've two clear cycles to the downside, which is telling us that since early June to now, which is a month, we've had more selling than buying over the last month. Isn't that correct? We've had more selling power than buying power. And that's a difference towards the Nasdaq, whereas the Nasdaq, we have more selling power and we are going with that direction. Whereas at the moment, we've had this pretty sideways market. Then for the last month, we've had more sellers in. Yes, I understand that it's come back to an area that every time it comes back to the area, we get some sort of reaction. So I would suspect some sort of a jump, but will it be to there and then go again? Or will it just smash through that level and then retest? Wheat would actually be a pretty decent example of that. If we have a look at wheat. So wheat's at this level here, pretty decent level, look, and it smashed right through. I'm not saying it's identical, but it smashed right through. Whereas oil, yes, the level is a little bit stronger, but again, it's coming back down into this area. So am I confident that this will go back up? Not massively, but again, we are in the midst of a crisis with the likes of gas and oil and energy. So I can't say no to it. Look at natural gas. Again, natural gas is similar. Look, the level bounced twice, three times, and then look, smashed through. We talked about this trade. We talked about the entry here and the stop loss here. So rather than trying to catch the bottom of this, what we did is we took this high and we said, once it makes a higher high, we're in the market. So at the moment, anyone that took that, you are at this present moment in time, you're 1% up on that. So if you risked 100 quid, you are 100 quid up. So well done, anyone that took that. But again, it's come back to whether this is going to happen, the same thing is going to happen or not. Now, very quickly, I'm just going to have a quick look at Tesla and Twitter. So we all know what's after happening with Tesla and Twitter. If you don't, you've been living under a rock for the last week. So Elon Musk has pulled out of his takeover of Twitter, which meant we had a little bit of a run on the likes of Tesla, and then we had a big sell-off yesterday. Okay, so we have this little bit of momentum, this sideways movement going on here at the moment. And then let's have a look at Twitter. So this is what's after happening since then. Twitter has had a pretty big jump to the downside. And looking at pre-market, it looks like it is going to continue going. Now, with that failed takeover, who do you think is going to be the big winner out of the two of them, Tesla or Twitter? And most people have said Tesla, and some people have said maybe Twitter. But okay, so we'll just work on that comment there, and maybe Twitter. Isn't isn't it brought the attention to the likes of Twitter with fake accounts? Because remember, there are loads of bots out there. So for instance, one of the things that happens on social media is fake accounts. So there are loads and loads of people out there that will contact you on Twitter and go, oh, do you want to buy followers? I can give you 100,000 followers for 20 quid. Now, what happens is you have a mobile farm. Literally, it's a farm of mobiles stuck to a wall. You could have thousands of them, and all the phones are all talking to each other and liking photographs and stuff like that from each other. Okay, so what they do is they copy someone's profile, and then they link them all, and they all start talking together. They start talking to each other, liking each other's stuff, and it's just an algorithm on the actual system, which means then it's very easy to generate hundreds of thousands of accounts, but they're not real accounts. They're actually bots, or they are fictitious users. Now, one of the big things, and the big thing that has stopped the takeover of Twitter and this is fake accounts. But at the present moment, Twitter and Instagram and Facebook and Snapchat and Pinterest, none of them have come out and said that, yeah, we have loads and loads of fake accounts. They just go, we have accounts. So this might bring a little bit of an unprecedented thing towards ahead here, and find out how many of those are actually real accounts versus fake accounts. And then if they are fake accounts, the value of this company then may depreciate 10, 20%. So in my opinion, I would expect to see more downside across all the social media platforms off the back of this. Now, again, I'm only surmising here. I'm not guaranteed that's going to happen, but looking on the back of it, this could have a knock-on effect for the likes of Snapchat, Facebook, Pinterest, with the fake accounts pandemic that on these social medias, and that's something to be aware of. Okay, so it is something to carry on. And then we had Pepsi, who come out with earnings. So Pepsi's earnings come out, and they are 7% up, and you can actually see it. It is now 2 quid up on the pre-market. So the market has been pretty bullish on the back of Pepsi's earnings. So Pepsi is something that has continuously grown throughout this period of time where we've had huge pullbacks. Let's see how Coca has gone. Pretty sure I have it here. Very similarly. Very similarly, both of them have fared. Probably Coca-Cola has probably fared a little bit better than Pepsi. Okay, everyone, it's been an absolute pleasure. Thank you very much. Hope you all have a lovely evening. And anyone who wants to get in contact, feel free to reach out. Anyone who is on YouTube and you want to jump in on my free courses, don't be afraid to jump in on. Thank you very much. Hope you have a lovely evening. Talk to you later. Bye-bye.